Okay, good morning, traders. Welcome to another trading week. So, in here, we discuss smart money trading and using it for real-time market to actually see how we can be profitable trading with the smart money concept. So, good morning once again, and let's dive into the chart this morning. So, basically, if you're new here, basically what we do here every morning on every Monday morning by 7 a.m. is we look at the chart from the weekly perspective and make our directional bias for the week. And by so doing, we kind of like this serves like kind of like an eye opener for everyone that gets to come through this live section. At least after this live section, you actually know the projections you should be working with for the week. So we'll be starting with Bitcoin as normally do. So let's check the Bitcoin chart this morning. Okay, so here we're on the Bitcoin, and there's something very, very important I want us to actually look at for. Okay, good morning, Clinton. Good morning, Allison. Good morning, Kelvin. Uh, good morning, Baine. Good morning, David. Good morning, Divine Chisholm. All right, so let's look at BTC from the daily time frame. So if you've been actually been actively following our live stream properly, you will see that what the demands of actually been looking at for Bitcoin is where the price actually what taps into. It's actually where the price tapped into. If you actually want to understand what I'm saying, check the last week or other previous live sections, because a lot of times we traders or most traders, they don't look at the chart from a bigger picture, and that's why it's always advisable you should look at the daily time frame so that you actually understand where you are coming from, where you are heading to, and where you will be like trying to position yourself to. Because from the daily time frame we had this was the demand zone we had, this level. Let me get to zoom this out so we'll mark the zone properly. Okay, so this was the level we had on the daily time frame. Think we've been marking this zone for like up to a month now. So this was the daily demand zone we had. All right, so this was the daily demand zone we had. And what did you notice in this daily demand zone? We had this break here. That is break. And on the daily, we have there's another break at this point to the upside, which tells you that the market is still bullish. We had another break at this level again, which tells us that the market is still bullish. Now, when I marked this zone for the weeks I've been marking this zone, I said something. I said this part is what our inducement. This is our inducement level. This was our inducement, and why did we mark this zone? This is the origin of this movement. In as much as you have this other block that price reacted to, but this is why it is called what? An inducement. And if you don't actually understand inducement, you'll be marking all other block as other block, or all demand zone as what? Demand zone. So that's what actually differentiates what? A demand zone that will hold and an inducement zone. Once you understand liquidity and inducement, a lot of zones you actually take your trades from, you won't take them from that part. So what? This was the zone, and we had a fair value gap. And if you look, we have this momentum. And before we consider any other block as a valid other block, we want to see presence of inducement. If there is no inducement before our other block, that trade is what? An invalid setup. So you can actually see that price dropped. Despite we had a news about China sold all of their bitcoins, which actually dumped the market. But you see where the market dumped into. taking out all of what? This liquidity. So let's step down to the 1 hour. So actually see the trade we took last week and why we deleted that setup. So on the 1 hour time frame, this was what we had on the 1 hour. Okay, so we had this break of structure here, have this one here, we had another one at this point. So after having this one, the next thing we saw was what? We had this other block here, sitting here. Now, when the price, and I stated that this was what? Trendline liquidity. Trendline liquidity. How did I know this other block here wasn't going to hold? That's from experience and from studies. How did I know this was not also going to hold? Because we had other block here and we had what? Other block here. But if you look closely, you see we had fair value gap on this one and it hasn't been filled. And what did you see? This price came, filled all of the fair value gap. Immediately I saw price fill this and went straight to our take profit without tapping us in. What? We deleted our entry. Because I know fully well that what? If this price does not tap us in and all of the fair value gap has already been filled, then there is no reason for us to still keep holding this trade. Because what? I don't take trades without fair value gap before my entry, in as much as we had here as what? Liquidity. But for the fact that if the fair value gap was still here, we'll have still left this order open. But what? Price filled the fair value gap and what? Continue to the upside before what? Dropping to the downside. So immediately I saw this happened, I said what? I announced on the Telegram group, for those that are on the Telegram community, that what? The order should be deleted. Now, so let's get to look at why I said the order should be deleted. If you look at this chart, this is kind of like the eye straining. If you look at this chart, let me get to put this on 4 hours so actually get to understand, because I want us to actually see the daily buyers we're actually looking at for. Now, if you look at this chart from the 4 hours, if this zone is broken, then this is the zone you want to see price run into, because you already have all of these lows as what? Your liquidity that you want to see price clear. So that's why a lot of times I actually say that before fundamental comes in, always look at your technical properly. If you look at your technical properly, you will get to actually understand where the market should be heading to. And that's why this zone was already marked. And you see, immediately price tapped into it. You saw the response to the upside. So let's get to look at what are we expecting for this week. What are we expecting for this week? So for this week, all fingers crossed, I'm not seeing any buy or any sell yet on BTC. There is no continuation pattern yet, because what we have here is we have this candle week, and what we can't say we want to trade from this zone. We can't say we want to trade from this zone, except what we get some form of inducement. But for the fact you have this liquidity below this point, you have this liquidity and you have this candle week, definitely want to see market pull into this candle week. On BTC, there is no buy yet. So let's check if we can get maybe a sell to the downside. Let's check and get a sell to the downside. So looking at this, let's get to mark this properly now. So this is what our change of character. We have this change of character here, and we have our break of structure downside. Have another break of structure to the downside at this point. Alright, so where is the last order block? Let's check. Has this been filled properly? Let's get to switch. Okay, so if you look at this one, has been filled with this candle wick. So this is where we have the last opening that is yet to be filled. So this is what our inducement. So if we actually want to look out for a sell on BTC, we want to see the market take out all of these relative equal highs at this point, then tap into this zone. And if you're actually taking this trade, we want to go in with entry confirmation because we have this high pending. So we actually want to see the market give us confirmation from this zone before we actually look out for any trade opportunity on Bitcoin. So for now, all fingers crossed, we don't have any directional movement we're expecting. So at this point, if the price pulls up to the upside, then we'll look out for reason to sell from this point to the downside. But if the price decides to continue to the downside, then what, we still wait till it gets to this zone to give us more extra confirmation. But on the daily level, we can see that price has already mitigated the daily demand zone we've been waiting for since last month. So that's why it's actually very, very good you don't get to miss out on the live streams every Monday, because you will get to see the chart from a bigger perspective and with a different experience. So I believe the BTC explanation is okay and we all followed. So let's look at gold. Let's look at gold chart this morning. All right. So looking at the gold chart from the daily level, you can see that gold is bullish, and you should be looking out for more buys. Just like what I do say, if the trend is bullish, you have no reason to sell. If the trend is bearish, then you have to keep looking out for reasons to sell. So looking at these directional buyers from the daily, gold is bullish. So let's check out for us to actually see more clear and more detailed chart. So here on gold chart, let's look at the last break of structure we are having. This is the last break of structure and the most current break of structure on this chart. So we should be looking at for from the 4 hours. We want to see price come back to okay, what is inducement? Now let me show you an example what I mean by inducement. Let's assume this is what the market was selling, and you have something like this, and price comes back to this, then to the upside. Now what you were taught in smart money is you should come back to take a buy at this point. That's what a lot of people think, or a lot of people understand by break of structure and other block. So you want to actually take a buy from this zone, but this is an inducement. The original order block or the main zone you want to see the market pull up from is this point. This is what I want to see the price pulling up from. So this zone is there to induce a lot of newbies into the market to taking early buys. So basically, inducement is that zone that calls for early entries. It's not the main zone, it's not the right zone to trade from. That's why it's called induced. So you are new to smart money, that don't understand, that's why you be trading all other blocks you see in the market. So this is an inducement zone. So the original zone to actually take a trade from is this, and that's why I said we don't take our trades without liquidity or inducement. So price will not tap into this one, and you will not see this expansion to the upside. I think we had something like that on gold. We had something like that on gold from last week. Let me get to put this chart on 1 hour so we get to see that. So we've marked the 4 hours zone, but I want us to check something quickly on gold. Okay, so previously on, I think the last live stream we had was on Tuesday. So previously we had this level on gold, and I think as of that Tuesday, the market was somewhere here, and that's what made me to actually draw this stuff. I was expecting the market to what, take out this liquidity, and we said here was what, our inducement. Wanted to see price pull back before what, continuing to the upside, as we predicted that we were expecting the market to give us uh, good above 4,000, but price didn't actually retrace into this zone and continue to the upside. So let me get to take this out, and let's actually see what gold did on 1 hour so that you understand the concept of inducement properly. All right, so if you look at this part, we have what, this break or structure. Have another what, break or structure. Have another break or structure. At this point, let's get to see if there was anyone again. Okay, none. So if you look at this gold setup now, we have this zone. This is the last zone that causes break or structure. We have this zone, right? Now, what did you see? Price pulled deeper into this. So this was inducement on gold. This was the inducement you had. So this zone that caused the early buys, a lot of persons coming in to take the buys, this was where you had the inducement on gold. This zone, that's the inducement zone. So that's basically what inducement does. It lures you into what, taking early entries. It lures you into taking what, early entries. So let's look at the current price action on gold for this week. So looking at it from the 1 hour time frame, we want to see price come into this. This is what we want to see for this week. Yes, inducement is like a fake break or structure. Other block. The other block is valid. It's not like the other block is, but you will be the one to actually define what you want your other block look like for you. But if we actually include inducements into picking your other block zone, it will actually what, improve your profitability in actually what, picking other blocks. You won't get to pick all other blocks in the market. It's not like, okay, look at this, actually cause a break or structure, so it's an order block. But for you to actually take a trade, this is invalid. That is what differentiates you from someone that is actually what, new to looking at other blocks. All right, so looking at this is the other block we want to actually wait for this price to come back into. We have this liquidity sitting below here. So we want to actually see price come to this zone on the 1 hour time frame for us to actually look out for more buys to the upside. So we are bullish on gold, and all we are looking out for is what, more buys to the upside. More buys to the upside. So I believe we actually understand the Bitcoin chart and the gold chart. So now let's look at Ethereum. What can we show on Ethereum for the week? All right. So on Ethereum, first, you can see that what, price has already tapped into a daily demand after what, clearing all of the liquidity. So we'll step down to 4 hours to actually see if there is any trade opportunity we can actually what, look out for. So here on the 4 hours time frame, this was what? The last major load that was taken out. It was the last major load that was taken out. And where is the last high? This is the last high. Sitting here. This is the last high. So if we are to work with what we're seeing on the 4 hours, we have a supply at this point. We have this supply, and we have what? Our inducement here. We have this inducement. Then we have the fair value gap above this point, which makes this zone what? A high probability what? Setup. So let's step down to the 1 hour to see if we can get a buy to ride this up. So looking at Ethereum from this now, for us to actually take a buy on this setup, we want to wait for Ethereum somewhere here with this as our inducement. But I'm not actually okay with this particular trade. I won't actually love to take this trade because we have this candle wick to the downside, which might actually maybe trigger price to the downside. So if I must actually go with this particular trade, if I must actually go with this other block, I want to actually see what, because we already have what, a change of character here. So I actually want to see on the smaller time frame, I want to see something like this. Before what? So on the smaller time frame, I will want to look at what price will do when it comes into this zone. Maybe on the 15 minutes or on the 30 minutes before I will actually what? Take this buy to the upside. So all fingers crossed. And if we get any entry confirmation, then we can actually go ahead to take the buy. But without any entry confirmation, please listen, without any entry confirmation, I'm not taking this buy. I know I'm stating it because a lot of persons will say you mark this zone and want to immediate price came into it, I took the buy. No, I actually want to see confirmation that this zone is holding, in as much as I have what my inducement at this point and my fair value gap before this other block. But I won't want to take this zone if I didn't have this candle wick to the downside. I wouldn't have actually what waited for confirmation. I would have taken this trade aggressively. But since I have this to the downside, and coupled with the whole market condition, you have to trade with what? Caution. You have to trade with caution. You're trading with your money. So you don't come to play or take based on how your emotion feels or something. No. You have to be responsible for your actions. So we want to actually see confirmation at this end before what? Joining the buy. If you don't get the confirmation, then we'll wait for the confirmation on this daily level. If we have any. That's it. But overall, we are still bearish from this point, from the 4 hours. But on the daily, market has tapped into what? A daily zone. So we should be expecting more push to the upside, more push to the upside after tapping into this zone, more push to the upside, except the market wants to continue in what? A bearish leg to the downside. So that's what we have on Ethereum this morning. All right, so let's look at USD JPY. Where's the JPY? Okay, so from USD JPY this morning, looking at the daily buyers who've been bullish on USD JPY for the longest, and I'm still what? Bullish. So on the daily time frame on USD JPY, this major high was taken out, giving us what? This low. We have this low. Yeah, so we have this low and this high, so that's our trading range on the daily time frame. On the daily time frame, this is what our trading range. So let's step down to the 4 hours. All right, so on the 4 hours, this is what our change of character. On the 4 hours, we have what our break of structure. Yeah, on the 4 hours. So from the 4 hours level, we have this zone as what our order block. On the 4 hours, so we know price actually retracing all the way to this point. It's something very, very unrealistic for now. It's not like it's not possible. It takes just one news. But let's step down to the 1 hour so we can actually see if we'll have any trade opportunity on the 1 hour. Alright, so on the 1 hour, we already have what price dropping to the downside, and price has already given us what a change of character. A change of character here. So having this change of character, this tells us about within the internal price move, we want to see this price retrace to this point before what continuing to the downside, but that will only be valid if we have what form of inducement before this point. So I think I already see one. This has been given. So if this market is able to pull to the upside, then we should be looking out for a reason to sell if we get a confirmation. But I actually want to see price pull back into what this region, into this region. I actually want to see price into this zone here, but also actually what look out for buys to the upside. But I actually don't actually love this zone because what there is no fair value gap. So I would prefer to go in with what entry confirmation on this particular one. I want to go in with entry confirmation, so I want to have a chalk on 15 minutes or 30 minutes for me to actually what take this buy on USD JPY. Last week we shared a buy on GBP JPY. Let's get to look at GBP JPY. Okay, so the trade is moving. The trade is moving nicely. So let's look at what we have on the daily time frame and how that trade came about last week, Thursday or Friday. Alright, so here on the daily time frame, let's look to the left because I want us all to actually understand the trade idea. So from the daily, you see we have this high, and when you have this high, this tells you we have what liquidity. Actually, we're taking look at the topic of, let's say, a course on liquidity. You will actually understand what I mean. So liquidity actually lies at what old highs and old lows too. So we have this liquidity resting at that point, and having that liquidity at that point, what can we see? We have this break of structure, this change of character on the daily. We have that change of character. So let's step down to the 4 hours to actually see what the price is telling us. All right, so on the 4 hours, we have this zone. This is the other block we want to see on the 4 hours. That's if this one fails. This is what we should be looking out for. So let's drop down to the 1 hour to actually what understand the trade idea behind this particular trade we are on now. Okay, so here on the 1 hour, you can see the chart is already labeled. So we have this break of structure, and what? Break of structure, all of this to the upside. Think Clinton, you asked something, and this is exactly what I was explaining for you when we were talking about what inducement. And for those on the Telegram community, this trade was shared on the Telegram. And if you want to join the Telegram community, check description of this video. You will see the Telegram community below, so you can click to join too. So if you look at this, we had this break of structure, we had this break of structure to the upside. Why didn't I choose this particular one? If you look at this other break of structure, we have this liquidity below it, and that is why what I didn't choose this one. So this one was already what out of the picture. If you look at this other break of structure, we still have this zone below this. So what this now tells you, this is an inducement. You see it's already labeled an inducement, and we have a fair value gap below it. So, and these are what criteria I actually use in picking my other blocks. I don't pick my other blocks without fair value gap or what inducement. I can actually mark break of structure, but you will not see me taking a buy or a sell from any of those zones. So what? That was the reason behind this particular trade, and it's immediately what price tap into it. We already what heading to the upside. I think this should be more than 1:1 running. So I will announce on the Telegram group for those that took the trade to actually what place a break even. And if you see, I marked this high, telling you that what liquidity is resting above this high. In as much as strictly I trade 1:3, but if you want to go full in, this should be like 1:4, 1:4 plus. Yes, 1:4 plus. So that is it. So this is for GJ. So if you have any pair you trade and you want me to look at, let's do that quickly. If you have any pair you trade and you want me to look at that pair, drop it in the comment section. Let's look at that together. Drop your pair in the comment section. So while I'm waiting for the pairs to be dropped, let's look at EU, okay, PNB. David, you and BNB. It seems you're married to CZ though. Seems you're married to CZ. Okay, so let's look at BNB from the daily. You can be dropping yours while we are looking at BNB. Wow, this is massive. So even the pullback BNB had no effect on AUD USD. So from the daily, we are already bullish. So the crash didn't actually affect BNB that much, because we can actually see the retracement on 4 hours. I'm not seeing anything on the 4 hours. I see nothing on the 4 hours. Let's step down to the 1 hour, because all I see is what bullish moves to the upside, and the price wants to keep creating what higher highs and new all-time high. So looking at this from the daily, first, let's mark the liquidity we want to target. So this is the liquidity we are targeting. There's no reason for you to look out for sells, because you have all of these relative equal highs, and price has to take them out. So if price wants to actually sell, if you're looking out for sell opportunity, this is what you should wait for. You should wait for this price to break this, sweep this high, come back to give you a change of character. A change of character. So you want to see this. This should be taken out, giving you what? A change of character. But if we are to look out for more buys to the upside, we want to see this is what? Liquidity. We want to see this liquidity taken out, and price should drop into what? This zone. So we want to see price sell from this to this point, then we'll continue the trend to the upside. So David, that is what I can see on BNB on the 1 hour. Anything outside of this zone, we'll be looking at for what? Sells to the downside. So I think that is okay. Let's look at AUD USD. AUD USD. So looking at AUD USD on the daily, so on the daily, we can see that what? We are dropping to the downside. So let's get to see if we have any possible setup. So from the daily, we have this high taken out, and we have this other block below on the daily. We have this liquidity that needs to be taken out. This liquidity that needs to be taken out. So let's step down to the 4 hours. So on the 4 hours, this is what our chart looks like. So this is what our chart looks like. Let's place this properly. Okay, so we can see we have this impulsive move to the upside. We have this fair value gap, and all of what we have here is what? Liquidity. So what are we expecting now? Let's look at the internal price action. So looking at this, we have a change of character. Change of character here. We have break of structure to the downside. Market pulled up, but this wasn't clear. Instead, we had a sweep, and we still had another what? Major break again to the downside. Meaning what? We are still bearish. So if we are still bearish, where is the zone we want to actually what? See the market react to? This is what we have on the 4 hours. This is what we have on the 4 hours. And where is our target? The first target will be at this most recent low. So let's check out 1 hour. Let's check out 1 hour at this point. So looking at the 1 hour price action, we find this zone to this point. So this is what we have. So this is what our inducement. And this is our supply zone. So we want to see this price pull back into this zone and what? Continue to the downside. And if we should break above this, if we should break above this supply zone, there is no reason for you to sell, because price will be targeting what? this high. Now, how do I know price will be targeting this high? If you look above this, you have your liquidity sitting. So any break above this will trigger price to continue all the way to the upside. But don't forget, we have this supply zone and we have this demand zone sitting here. So we want to see possible reversal from this 4-hour zone marked, or sell to the downside into that zone. But anything breaking above this, then price is targeting this high. So any other pair you want us to look at, let's look at them quickly. Let's make your chart work quick, easier for you. So while I'm waiting for the next pair, let's look at EU. Let's look at EU for the EU traders. So from EU should be having similar price action like that of AUD USD. Should be having similar price action like that of AUD USD. All right, so I'm seeing a very you feel like price will take out that liquidity on AUD. Okay, so this is the daily demand zone on EU. We have this daily demand zone, and we can see where we had the last major what break to the upside, and we have what all of this. We have this liquidity yet to be taken out on the daily. So let's step down to the 4 hours. So let's get this zone properly. So on the 4 hours, we'll get to refine this zone. Refine this. Alright, so we had a major change of character. This was sweep. This was a sweep on the 4 hours. So let's check 2 hours to actually get where we had a major change of character. Alright. So we had a major change of character here to the downside, followed by what? This break to the downside. So if you have to look at the 2 hours, we are still bearish. And where is the next low we want to see price take out? We want to see price take out this low at this point. So where is the other block to take our trade from? I'm seeing something very, very confusing. If you are seeing this zone, if you are seeing this other block, please unsee it. Let's go down to the 1 hour because I'm seeing something on that 2 hours that looks very tricky. Alright, so here on the 1 hour, I think this is what an inducement we have to avoid. This is what I'm seeing. I'm seeing this zone. This zone is sitting here. We have this zone sitting here, and we also have this zone sitting here because this is the last major order block that is yet to be mitigated. Now, if you look at this, why did I pick this zone? If you look, there is what? An imbalance here, also known as what? Fair value gap. So whatever we have here will serve as what? An inducement. Serve as an inducement. Price may possibly maybe react from this zone to the downside. It can possibly, or maybe it will have a sweep, but this is the more safer zone to actually what take that trade from, because you look at this point, you still have all of these imbalances here. So to be on the safer side, this zone should be what we should be looking at for, to actually what take this then to the downside. So that's what we have on EU. Clinton, you are saying something about price taking at the AUD. Let's look at that AUD again. Let's look at that AUD. Check out. Let's look at the 2 hours. Let's look at the 2 hours. From the 2 hours, everything is okay. And if the stop gets hit, that's why you have your stop in place. That is why we have a stop in place, because your stop is what helps you to actually what manage your risks. Your stop is what actually helps you to manage your risks, because if you actually take your trade without using your stop, then you're not trading, you're gambling. You're gambling. So if the stop loss hits, and you know how we trade here, we don't take more than 2 trades at a time. You hardly even see us be on 2 positions at a time. It's rare. It's rare because the type of trading criteria I implement, you hardly even see me take 2 trades. You hardly even see me even drop 2 trades on the Telegram community. If you've seen max 2, but you can't even see more than 2, because for the trade to actually even meet my trading criteria, they don't even come easily. Can you imagine? Try last week. It was only one opportunity we had, one on a Bitcoin, and price just left us without even and straight to take profit. Then the next trade we had again was the GBP JPY that is up and running. So you can actually see that what it's like for the pairs to actually even meet what I actually want, they don't come easily. So I might end up even taking, like, in a month, like this month so far, if I'm not mistaken, we've taking just 2 or 3 trades. 2 or 3 trades. So that's how crazy it can actually be working with my own trading criteria. It helps to actually filter the noise in the market without much stress. So as it stands now, this is the only trade up and running. So, and break even is already what in place. So that's it for this pair. So for the AUD, if it hits SL, I don't trade AUD. So for those that trade AUD, if it hits SL, come on, that's it. You move, and that's why you should always set a stop loss that you know you're okay with. Don't use emotion. Place your trade and go. If you hit stop loss, you know that one is stop. If you know you're not ready to risk that day, don't place that trade. And if you know you're having family issues or family problem, don't place that trade. To save your own self, the mental and psychological well-being, don't place it. See, you know you want to lose that your $10, your $50, your $1, that's when you should place it. If you know you're not ready to risk that money, don't place it. Okay, so let's look at something different. I think nobody's dropping any other pair. So let's look at should I say G or USD card? Let's look at USD card first, because USD card has actually been printing good money. All right, so from the daily, been following up with USD card, and USD card has been what pushing massively to the upside, and that is one thing. When you understand directional bias, it will help you a lot to actually understand where price is heading to. So first, you can see that Yes, so family Clinton, you will not understand. Now, I know I'm telling you, if you have family issues, I don't want to talk about relationship issues because nobody on this live section will actually agree that they are dating, so or they are married. So let me use the most common one we are used to: family. If I say relationship now, everybody will claim like they don't know. I have someone on this call that will claim that he does not. So let's work with family issues. So from the daily, we have this zone. We have this zone we want to see price pull into, then continue to the upside on the daily. So on the daily, we already see that what we are pushing what bullish, and price has successfully what taken out this major high. So we want to see push to the downside and continuation. And if price continues to the upside, we see we have this fair value gap and we have all of this liquidity we have to take. So on the daily, we want to see more push to the upside. So coming to the 4 hours, let's see what we have on the 4 hours. All right, so here on the 4 hours, let's mark the most recent action. Have this. All right, so this is what we want to see. This is 4 hours. Now, this is what we have on 4 hours. Let's go to the 1 hour. So we get to refine our zone and see if that is actually matching with what we have on the 4 hours. So we are here on the 1 hour. We are here on the 1 hour, and on the 1 hour, we have to refine our order block. We'll have to refine our order block. So this is what we have. And I'm so happy this market has given us what? Some engineered liquidity. So if you look at this point, look at what the market did. And this is what I was trying to explain on BTC. The BTC trade I explained previously. That if the market gave us something like this and pushed to the upside, then leaving a fair value gap, that other block we were trading from will have actually been still valid. But what happened? The market filled the entire fair value gap, invalidating our order block. So if you look at this one, we have this impulsive move to the upside. Then we have this liquidity created at this point. We have this liquidity here. So what are we expecting? We want to see this price drop into this zone and what continue to the upside. So for USD card traders, this is what we want to see. Price come back into this zone. That's 1:3. All right, so you can decide to target exactly 1:3. This is exactly 1:3, and this is more realistic because what? Sometimes market can decide to get into this zone and what? React to the downside. So it's better you actually close before the high. And if you've actually been monitoring all my trades I do call or drop, you see me, I don't target the extreme high. I target before because I always try to, like, should I say, implement or think what if, because a lot of times it happens. You can actually see, okay, last week I had a zone I was actually looking out for, but I didn't actually drop this trade because the risk reward ratio wasn't actually okay with me. So I had this zone I was looking out for on this trade. I had this zone here I was looking out for on this trade. But as of when I saw this zone, the market was yet to give this low or this low. I just had this and I was actually waiting for USD card is slow. Don't worry now. You've not jammed USD card on a on a day that USD card wants to mess with your life. Don't worry. Yes, so sometimes it's actually slow, but when he wants to do it, USD card is crazy. Yes, 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 yes. Not even Swiss this thing itself. If you look at let me check. Okay, let me just explain this stuff. Let me be done with this explanation. So when I saw this, it was actually yet to give this low, because if this low was present as of then, I'll have actually would drop this trade, and you see immediately it tapped into it. It came out to what? Take out this high. So now look at what I was trying to explain now. You see, immediately this price got to it. It didn't take out this high immediately. It pulled back down. So imagine, let's just assume your take profit was at this high or above it. Price down comes very close to your take profit and start retracing down. You see, your emotion will not start what? Shaking. You will start being like frightened and you will want to not close. So it's always best you what? Look for a very realistic take profits and what? Close your trade. So if I'm actually the one taking this trade, I will have actually closed maybe at this high or at this one. I want to close at any of these highs before, because I know definitely this high, this one, this will be like my TP1, TP2, and TP3 or something. So always try to look at the highs when you actually were setting your take profit. Let's look at USD CHF. Let's look at USD CHF. I don't know USD CHF as another sluggish pair or something. Pairs that I know that are very, very sluggish is, if you look at, let's say, Euro CHF. Euro CHF, Euro CAD, those are pairs issue. Just look at this. You will never see something clean. Are you seeing Clinton? You will never see something clean on them. Are you seeing? Look at this pair. And the commission you pay, the commission you get to pay, are you seeing? This is 4 hours. And look at 4 hours is looking zigzagged. This is why I don't even get to go close to. That's why I love JPY pairs. 1, 2, 3. Take profit on your stop loss. You're out. Look at now. Look at this pair. And spread at night. The spread at night on this pair, it's crazy. Like the spread at night, it's crazy. You will see when the gaps will open. Now let me show you another one. This is a Euro CHF. Let's look at NZD CHF. NZD CHF. Those are pairs where you have a crazy distance at night. You won't even believe. Are you seeing? Look at, it's falling, but it doesn't fall straight. That's why I prefer EU, AUD, NZD, USD too. Some of these pairs, because what is this? You'll be moving to the upside like you're accumulating, ranging. Don't range with my money, please. Straight or not. So when you actually, if you're actually like a beginner, yeah, try to look at, let me not say exotic pairs. If you know you can't actually flow with gold, look for something that it's kind of like fast and kind of like slow, like kind of like in the middle. And that's why a lot of times I advise newbies to actually go with Euro USD, AUD USD, NZD USD, GBP USD. Those 4 pairs, they are very, very easy. Like they are very, very easy to actually handle, because the pips calculation. Now, if you measure like, let's say if you measure 10 pips on this, 10 pips, let's say this is 70 pips, and you use a 0.1 on this, it will be less than $70 if I'm not mistaken. But if you use 70 pips on AUD, EU, NZD, USD, GBP USD, those 4 pairs, 70 pips is 70 pips. If you're using a 0.1, what you will get is $70. If you're using a 0.01, what you will get is $7. Now, if you come to USD JPY or the JPY pairs, all of the JPY pairs move in accordance. Let me show you something. Let me show you something on, so that maybe after this call, if you're with your MT4, MT5, check this out now and let me know. This is, let's say, let me measure like, okay, let me measure like let's say this is 197 pips. I don't want to do the 0.3. If you use 0.1 on this, it will not give you $197. Every 10 pips movement on JPY pairs is $7. A lot of persons don't actually know how to calculate this. I don't know if I should actually take out my time to actually teach how to actually calculate pips, but maybe I will do it for those that signed up for the classes. Maybe towards the end of the class, I'll actually teach how to calculate all of these pips. Now, because when you see some people just calculate some people will just carry their short position or buy position. Let me say something like this now. This is short. And they will place it. Let me say you're doing a 1:2. Let's give an example 1:2. Okay, let's assume this is 1:2. David, I should do what? You're not a newbie, please. I don't know why you always claim you're a newbie, please. Alright, so let's say this is a 1:2. And I send this trade to the Telegram, and I send it to, let me say a DM, and I'm like, take this trade. You won't know how to take this trade. This is what? 155 pips. Let's just assume you want to risk $155. Okay, you've not actually sat down to calculate this. No, it's very, very important too. I don't actually take any trade without knowing the pips I'm risking. Can't see. People should not mind David though. You can't actually sit down and you don't understand how to calculate these pips. Now, if you look at this, let's say I'm using so the way I actually do it is let me just take this to like 150. Let me take this to like 150. This is 151. Let's just work with 151 now. I've already said it that every 10 pips give you $7. So you have 151 pips here. So you just do 150 times 7. That means if you're using 151, divided by 7. So 151 divided by 7, they're about 21. So you will not know how you multiply it to actually work with what you want to risk. So if you already know that, okay, 10 pips is $7, 10 pips is $7, you will not times it. So when you times it, that is what will give you your lot size you'll be using. So if we say 10 pips is giving us $7 using 0.1, and what you have is what? Let's say 20 pips. The USD JPY pair you measure is like 20 pips. But let me just work with this 10 pips. And you want to risk $100. Now, first you already know that what? 10 pips is $7 if you're using 0.1. So if we should do 7 times 10 with one lot size, 7 times 10 pips, and you want to risk $100. So the way I do it is I do $100 divided by 7. I do $100 divided by 7. So that will give you using what? 1.4 lot size, like 1.4 standard lot size. 1.4. That's what you will use. What you'll be seeing is 14.2. 14.2. That's what you will see. So all you just need to do is just move the decimal. When you start using it, that's I believe in you doing manual calculations. When you start doing it, like when you set this here sell or buy to, you just go to your calculator, you also do it manually while you are trading. Because now that I'm explaining it, you won't actually get to understand it. But when I want to do it is maybe those are in the class. When I want to do it is I want to be with your MT5. So we get to actually do the maths together. You understand it better. I've explained for this boy called David that is telling me I should do it, that he doesn't understand. I don't know. That boy is always in my DM WhatsApp. So maybe he will be the one to come and teach us. You should understand better. So thank you for tuning in today. I believe we'll all enjoy this live section. And please, if you've not liked this live section, please do it to hit the like button. Or do you want me to come to your ATM to beg you for money? Should I drop my USDT address? Please do it to hit the like button for me. Do it for me. Thank you very much. And thank you for tuning in today. Thank you for always tuning in. And we hope to see you next week. And please, why coming next week? Do where to come with someone. Do where to come with someone, because can't be just be benefiting all this alone. You can't be benefiting all this alone. Do where to tap one or two to come and learn for free. All we give out here is value or for free. So let other people also get to benefit. So thank you guys, and I wish all of us a blessed week ahead. And for our traders, profitable week. And for our 9 to 5 or 8 to 5 or 8 to 6, whatever you do, we'll pray for a blessed week. So thank you all once again. Stay blessed.